All right. Well, good morning and welcome to our second live stream here, Simply Tax Talks. Like we said, we were doing something new. Wanted to be able to engage with you in a different way, particularly when there were big breaking announcements. And I have to say, last week we had some big breaking announcements. And so I'm happy to be back here with you again today. And we're going to invite Tad Gudenbauer and Yelena Bosovic back up to join us. And yeah, we've got a lot to talk about here, without a doubt, right? So I guess with that, let's just jump in with our top tax topics for the day. All right. Like the talking teeth. I feel like that kind of adds a little something here, But yeah, definitely feel like there's a lot to talk about these days. So saying, Elena, let's just jump in. Last Thursday, we had kind of I'll call it a pivot. It looked like a pivot to me, at least how I interpret it, in terms of some of the provisions that we had that House Democrats were proposing. We had about a little over 1,500 pages of new legislative text introduced. Can you talk about what's in, what's out, maybe what's new with this new framework, if you want to call it that?
Yeah, honestly, it's easier to almost start from scratch and kind of forget what House Ways and Means Committee released a couple weeks ago and kind of go with the entirely new framework, because they really did scrap a lot of what they started with and threw in some new provisions, some new policies in there that we maybe weren't expecting or didn't even think were on the table. So I kind of bucket it into three buckets: what's in, what's out, and what's still under negotiation. So what's in is kind of a mix and match of business and individual tax provisions to help raise some of the tax revenue that the Democrats will need to pay for the spending portions of the package. The big one is a 15% corporate minimum tax on large corporations with adjusted financial statement income in excess of $1 billion. There's also a 1% surcharge on corporate stock buybacks, which is about half of what Senator Wyden had proposed. And we kind of expected this to make it in. And instead of 2%, they're doing 1%. There's a global minimum tax in line with the OECD, which will likely be at least 15%. I think that's what the current legislative text proposes. But again, that's the agreement the US reached with all the OECD countries to impose a minimum global tax of at least a 15% rate. There's also some changes to the international tax rules. So mostly changes to BEAT, which would actually replace Biden's SHIELD proposal, which was kind of a surprise, mostly because the Biden administration had previously kind of wanted to do away with BEAT completely and replace it with something else. But instead, they're walking back on that now and saying, the Biden's proposal's out and we're going to stick with BEAT, just make some changes to how it works. There is also, again, not surprising, more funding for the IRS to audit the wealthy taxpayers, which, again, the Biden administration defines as those with incomes over $400,000. There's a surtax on multimillionaires and billionaires, which is 5% tax on incomes over 10 million, and an additional 3% on top of the 5% for aggregate gross income over 25 million. So it's kind of a ladder approach. The more you make, the more tax you pay. There's also, again, the provision that we expected to stay in there, which is the changes to the net investment income tax that would apply for those making over 400,000, and continuing limitation on excess business losses, and then expanding the child tax credit for 1 more year. The original proposal was 5 years, and they walked that back again to a compromise of 1 more year, so through 2022. There's also limitation on 1202 exclusion for high-income taxpayers or any estate or trust, and the effective date remains 9/13/2021 for that, as in the original proposal. They also made some modification to wash sale rules and delaying the requirement of capital and amortization of R&D expenses to after 2025, which again is expected to stay in there as originally proposed. And there's also about 10 years worth of expanded clean energy tax credits, because again, climate change and energy initiatives have been a big talking point for Biden, especially as he's attending G20 meetings and summits abroad. That is a big thing that he's pushing, is there's a lot of climate change or energy initiatives, including tax credits, included in this bill. Everything else is kind of not in here that was in the House and Ways and Means proposal and Biden's Green Book proposals appears to be out. That includes proposed changes to 199A. We didn't see anything in this new framework for that. Same with the carried interest proposal that would have extended the holding period of 5 years. That seems to be out. Per Senator Sinema, there are no corporate, individual, or capital gain tax increases, which was a really big change because, again, Democrats are relying heavily on those tax rate increases to raise revenue. So those have all been taken out. Same with all the proposed estate and gift tax changes, including lifetime exemption and grantor trust proposals, which was a big one for the estate and wealth planning tax advisors. And then, I mean, again, anything else that was originally in the proposal just seems to be out if it wasn't included in the updated framework. The big one that's still under negotiation, though, is SALT relief. So the SALT cap relief, the last proposal that was floated around was reinstating the limit from 2024 to 2027 and then returning to the full deduction in 2028. But that is, again, not a final proposal that's still under negotiation. So it's kind of the highlights, the bullet points of the new framework that was released last week.
Yeah, there is a lot in there. And I appreciate you walking it through because it was a big, some big shifts in there. Tad, what's your take? I mean, was there anything that surprised you about it? I mean, obviously we knew there was some pushback to raising rates, but yeah, what do you think?
Yeah, I mean, I think what surprised me overall on this thing was just how they skinnied it back. If you remember on the Ways and Means proposal, it was like 3,000 pages long. The tax provisions were, probably about a third of that. But what came out the other day, I think the tax section, it was like 150 pages, which makes it a lot easier to read on our standpoint. But I think what really stood out to me was how narrowly focused the tax provisions were in here. So if you really look at, most of these provisions are really, maybe not going to affect our client base when you talk about, the corporate minimum tax on, billion of book income and those type of things. We're not gonna see a lot of that come down through our clients. But, kind of on the other end of the spectrum, I'm scratching my head a little bit about some of the things that actually stayed in there. How they actually, kind of, picked and choose about, which items we're gonna make it in there. The 1202 thing is the one that bothers me the most. We had a number of clients that, did some structuring right this year and some acquisitions to, structure the acquisitions as C corps. They wouldn't normally do that, in anticipation of having 1202 availability, and now it's kind of being pulled out from underneath them. But that one, it just seemed a little odd that it would stay in there. It doesn't seem to fit in with the rest of them. It's kind of a benefit to not low income, but relatively speaking, people with not such high taxable incomes. That one stayed in, and just where they picked up some of this stuff. Like, let me give you a provision, for example, in here that actually made it in here is that, rental income from a prison facility isn't REIT income. Now, I know that probably doesn't affect a lot of this, but you look at that and say, how the hell did that thing get, make its way into this thing? Okay.
Right,
I mean,
right.
Something as narrow as that can't raise a lot of money. So somebody, some legislator must be upset with somebody who is, renting prison facilities or something like that is what it almost seems like. But there were a couple of provisions in here, and Yelena, touched on them in her discussion, was that will have a direct effect on our clients and a lot of people, and that's the net investment income tax being applied to trade or business income. To me, that's almost punitive. I mean, I get what they're trying to do, mostly in the context of S corporations, trying to, in essence, get at people who aren't paying any self-employment tax or FICA tax on that revenue and that income. But, to subject, all of that income to the 3.8 is really almost punitive. We have a number of clients that, they operate all their businesses, through pass-throughs, and they're totally active in there. They take out, substantial salaries and other self-employment income, and now they're going to get whacked with a 3.8%. In addition, they're almost all going to be over at least the first threshold of the $10 million of taxable, because again, they're basically reporting all the corporate profits or the LLC profits on their personal return. So to me, that one's a little punitive, as we go through and kind of analyze, the effect on our clients. The issue on the limitation of excess business losses, that may or may not have some bearing. Hopefully it will not. They didn't change any calculations or computations. They just extended that now indefinitely. I think it was supposed to end initially in 23 or 24, something along those lines. But the thing that's more concerning right now is, it's nice that we have this framework, have the bill text, but we have no clue what's going to be in the final thing. I mean, they've been threatening to release the new text. I mean, they talked about it over the weekend, but we still haven't seen anything yet. And quite frankly, I think that's really one of the concerns of, Senator Manchin and Sinema is that, look, we don't know what we're voting on or asked to vote on. So a couple of my takes on it.
Tricky situation, and I appreciate your perspective there, Tad, because it is tricky. And actually, we had a question here from Laura in the comments around those grantor trust provisions and whether or not we think those might stick, because obviously those fell out, which is a guy that practices in the space. I'll tell you that was definitely something I think many that I work with were pleased about. But I don't know, maybe Elena, any thoughts on that? And maybe to Tad's point that we don't know what's in there yet because we're not to the finish line. Anything specific maybe on the grantor trust or in general?
Yeah, I mean, honestly, we don't know, but what we're hearing is to expect like 80-90% of what's in there to stay into the final bill. And then maybe that last 10-20% to either change or be taken out or something new added in. So that's a good chunk of what's expected to stay in and not change. Again, because the White House and Senate and House Democrats feel like they're pretty confident that everyone agrees on this. And most of the resistance has been just, we need more time to look at this, not necessarily we don't agree with what's in it. So it's more of a timing issue rather than a substantive issue. And the big thing is the reason a lot of these tax provisions are in there are to pay for the spending provisions in the bill and the policies that are in there. And so as long as they can get to the number, which right now is like 1.75 trillion, as long as they feel all of that is paid for, then they won't just keep adding in tax provisions. And right now, everyone seems to think that they even have a little bit margin, maybe like more tax revenue than the spending that they need. But again, that's just the House numbers that have been run, and the Congressional Budget Office has not yet scored or, I guess, estimated the cost of any of these policies. They're working through that. Again, another reason Manchin has been trying to push the brakes on this because he wants to see some outside numbers on these proposals before he votes on them, just to make sure everything's paid for and kind of ticks and ties. So honestly, it just depends on how those numbers turn out and if they need to raise more tax revenue.
Yeah, no, interesting. And like you talked about the SALT cap, even if it's just a temporary piece there, obviously there'd be a cost to doing that. But then also things like, and I know many initially out of the gate, we got kind of that 3-page summary on the framework from the Biden administration last Thursday morning. And, there's it's about 400 billion, I think, that is the number they're looking at for the increased IRS enforcement, which seems a bit higher than, maybe what they were initially being looked at. So I don't know, is that maybe what you're, I guess, thinking there, Yelena, or maybe what you're hearing is that, there is some cushion and maybe it gets eaten into a bit with adding a few things and the CBO maybe comes back with a little bit lower number, but 80-90% is already in. So maybe something like the grantor trust might actually stay out.
Yeah, I mean, that's kind of what we're hearing is they're pretty close to a final agreement on the substantive. And yes, we're still waiting for SALT relief, but we keep going back to, they seem to think they have enough cushion to work with whatever gets changed in the last final bill that we see. But again, that's what we heard with the first bill. And here we are with a completely different framework. And so you never know. But again, the House is getting ready to vote on it probably later this week, Thursday or Friday. That's what we're hearing. And so if they feel confident enough to take it to a floor vote, that again probably implies that they are getting pretty close to what will be in the final package.
Great. Yeah, no. And please keep your questions coming here. Laura, great question on the grantor trusts. And Elaine, I'm going to go back to you with another question. One, I didn't actually get your, what maybe surprised you if you add on to anything from Tad there, but maybe a second parter here, because I know you get a lot of questions both internally and externally at the firm. What's been the most frequently asked question, I guess, related to the new framework or that you've had maybe in the last week?
Yeah, I think everyone's just asking the same question that we just got is how likely is this to stay in or how likely is this to stay out? Because part of what we do is tax planning, and tax planning through uncertainty and planning around new legislation. And so a lot of the questions we get is, well, this is all new, or how likely is this to actually stick around, and is it worthwhile to, tell our clients about it and plan around it, or think about, what this is going to mean for my tax return this year, next year. And again, but we don't know, but we can work with what we do have and plan toward seeing some of this sticking around, because again, we did see some from the original package stick around in the second version of the framework. And so a lot of things got taken out and some things got added in, but again, a lot of it did stay. And so because we're pretty confident that the majority of this will go through in the final bill, a lot of that just can be planned around. And so we always, tell our clients to reach out to us and make sure that we're in constant communication with all these changes and staying on top of everything, and as far as it relates to each client.
Yeah, I think, Damien, I think part of that too is that, we're kind of in, that funnel time period right now where, we started out with this big old top of the funnel, all these provisions out there. And it really was difficult because, we're early in the process, and now we're kind of down to where, we've got a pretty good idea, what's going to be in there. There may be one or two items out there, but honestly, if there were going to be some significant changes into the tax part of this, which I'm not really looking at the spend part, that's not really our world, other than the revenue part's kind of obviously tied directly to it. But I think now we're down to the point where the provisions that are going to be affecting our clients are kind of set forth here, and we can do a little bit more thorough job, I guess, of planning. But the hope is that we get something soon this week, as to where this thing may actually end up landing for everybody.
Yeah, absolutely. Well, with that, Tad, and I was saying last week when we kicked it off to say I'm always interested in your take on things. So let's get into our little section here. We want to repeat, which is Tad's takes. All right, Tad. So I'm going to ask you your take here. What are you thinking in terms of outlook of all of this? I mean, you were kind of talking, hopefully we get by the end of the week, but do you think we're moving forward? Do you think it's, we're really getting there? And maybe when do you think, what's your kind of over under on maybe when we'll see this actually through and actually enacted as legislation?
Yeah, I think that by the end of this week, there was some loosening even yesterday or last night. The progressives, or the leader of the progressive wing of the House, kind of relented a little bit on their hard line in the sand about voting on the infrastructure package until the reconciliation bill is voted on. They've kind of backed away from that now, and I believe what she said is that, look, we're going to put our trust in President Biden, that he'll do what he said he's going to do and deliver the 50 votes or 51 votes in the Senate to get the any kind of infrastructure bill passed there. So I honestly think that something will happen this week, with this deal. I know that Senator Manchin was, making the rounds, yesterday, and was, very adamant, that he's not going to be pushed. But I think things are coming to a head, at this point in time, and I think in that regard, that's kind of basis of my prior comments, is that I think we're pretty well have a framework of what the final resolution is going to be. But I'm thinking probably, this week, Thursday or Friday, that we'll have a vote, which is kind of good news and bad news. I'm going to harken back to, my comments last week on the retention credit. I'm pretty much of the belief now that that's going to be gone for the fourth quarter. Remember that the repeal of the retention credit as of September 30th of 21 is in the infrastructure bill. And Senate's already voted and passed that, and that's the one that they're waiting on the House to vote on it, and then President's signature to make it law. And I really doubt that the House is going to change anything in that bill, because if they do, they have to send it back to the Senate for another vote. And I think that's the last thing anybody wants to do. Is the fewer votes, the better. I think people are looking at these bills. So I'm kind of the view now that we're probably going to lose the retention credits for the fourth quarter. So the real question then is, people have been, reducing the deposits that we talked about before, are they going to be subject to penalties for not making those deposits? I know the AICPA has written a letter to Treasury and to some of the leaders in Congress about, enacting some legislation to make sure that people don't get hit with penalties on that for actually following what was law at the time. So I'm gonna put my over and under probably on Friday that we'll have something.
All right.
At least the infrastructure, I think.
Yeah, right. No, that's good to kind of, and actually we were doing another poll here, and we like to do these polls just to kind of, again, get your take and make sure we're responding to your questions and what, your perspectives and whatnot. But it sounds like it's kind of 50-50 split in terms of whether or not we'll see significant change, at least is what the group's thinking. I'll go back to both of you. Maybe Elena, we'll start with you first. Do you think we'll see, because obviously, Ted, you're talking about the infrastructure piece, maybe hopefully into this week. In terms of maybe the pieces in the Build Back Better Act, do you think that we're going to see this enacted before the end of the year?
Well, you kind of have to again go zoom out and can think big picture about this, and I'm going to give you the context again. So you can have two bills waiting to go through Congress and up to Biden's desk for signature. You have the infrastructure bill, which was a bipartisan agreement that passed in the Senate. I think it's been a couple months now. It's been a while, but it's been kind of held hostage in the House. It's the last step before it goes to Biden to become law. And the Congress keeps basically extending the infrastructure deadlines they were facing as far as funding for like week to week while they try to figure things out and get this other bill passed, which would increase basically infrastructure funding for another year. And so this infrastructure bill has been kind of held hostage in the House, being held up just because you have this group of progressive Democrats. I think there's like 96, 97 of them who've been saying we won't vote on the infrastructure bill and let it become law until we reach a final agreement on the economic stimulus package, which we're calling the Build Back Better Act. That's what's going through Congress now. And so you're going to have these two bills going parallel to each other. And the initial agreement between the Democrats was to vote on this by the end of October. And obviously we're into November now. And so House Speaker Nancy Pelosi plans to hold again a vote this week on both bills. So the infrastructure bill that's been sitting in the House, and then also the framework for the Build Back Better Act. The question on the latter is whether they're just going to vote on the framework saying, hey, we agree in general to these outlines of this bill, or if they're going to have legislative text to vote on Friday, which again, we haven't seen final legislative text, so it's cutting it close. But it appears that progressive Democrats are okay with just a framework to vote on and come into agreement in, and then letting the Senate kind of hash out the final details of the Build Back Better Act, which if you look at it that way, if the House does pass both bills through the House this week, let's say Friday, and they have final legislative text and everything, this now goes to the Senate. And then the Senate will probably take a few weeks because you have Senator Manchin saying, I need more time. You have Senator Wyden still pushing for, he wants a provision in there for drug pricing. And then he also wants to see his billionaire tax proposal in there. And he's holding out on both being included, which means this bill's going to get into the Senate and kind of maybe probably go through some revisions and changes there before it becomes law. So end of the year could happen, but I think we still have some work ahead of us, even if something does get voted on in the House this week.
Yeah. It was sort of I guess we'll call it a killer week. It was Halloween, so maybe I don't know if that's appropriate. But I mean, we didn't even talk about the billionaires tax, right? I mean, it was kind of like dead on arrival. I know, like you said, Biden's still holding out hope, and it's definitely been something that has been a wind up to. I mean, there was a lot that went into it before it was released, but yeah, that it kind of instantly got shot down, and then kind of moved on to other provisions. So it was a busy week last week from that perspective.
And, interesting, poll I saw in one of the readings I did this morning was on the billionaires tax. There was a poll taken, and they polled millionaires, and not surprisingly, the millionaires overwhelmingly thought that the billionaires tax should be brought back in. It was a lot better than the millionaires tax. So, I guess that just falls in the category whose ox is getting gored, but the millionaires are definitely, thinking the billionaires aren't paying their fair share. So
there you go. Right. Everybody. Yeah. Tax the guy over there behind the tree. Don't tax me, or whatever the saying is there. But all right. Well, with so much going on here, maybe before we wrap up, let's get our top takeaways for the week. All right. So let's go with you first here, Tad. What are your What's your takeaway here? What if you're going to leave everybody with just kind of a nugget, something to be watching for? What is it?
I think the thing to watch for is I'm going to be watching for what does come out of the House, and if anything on their final form of the reconciliation bill. Again, that's the one that's been seemingly have most of the change. I think everybody's pretty content on the infrastructure, and I think that's just basically being held hostage for the budget reconciliation. So I think that's a key right now to see if, as Elena mentioned, whether they vote on a framework or whether they vote on the actual text that was released, last week. So I think that's going to be the important thing to me that I'm going to be watching for.
Okay. All right. Well, Elena, you did such a great job kind of running through the what's in, what's out, what might come. Yeah. What's your takeaway? What are you watching for?
I think the holdouts still. So, watching what Senator Manchin and Sinema are saying, what press conferences they're holding, what kind of they're feeding out there into the world, just because they are the two main drivers of a lot of these shifts that have been happening. And because the Democrats need every single Democrat in the Senate to vote for this bill. Even one, senator like Senator Manchin saying, what, I need more time, could hold everything up. And so just keeping an eye on, again, the press quotes or releases or kind of news conferences that the senators are doing, because they do drive a lot of the impact of how fast this is going to pass, if it's going to pass, and what's in it. So I think that's what I continually watch for is, yes, the House Democrats are saying we're passing this. The White House is saying, we've all come to an agreement, we're passing this, but you can have this stopping point that it can't get past Manchin and Sinema, or can't get passed without them. So that's what I'll be watching, is just kind of what they're putting out there. And that kind of usually sways which way the wind's going to blow.
Yeah, well, it's definitely some interesting things to watch for sure, and see how it develops. I guess I'll say the thing I'm watching, and Tad, I think maybe you might have actually made this comment on a previous conversation you and I were having about how kind of the focus is maybe centered in a little bit here, a little bit smaller, at least in terms of our those that we tend to work with and our client base, and how all these proposals will impact, because the tax rate increases are off the table. But I'll say something I'm kind of watching is and maybe helping to bring some awareness to, certainly from a private client, high net worth family and planning perspective, the fact that some of these estate provisions, particularly the grantor trusts, are out. That's some good news. Is it entirely out? Again, like we were saying, can't necessarily say that. Nothing's certain until it's a done deal. But the thing I am watching for, though, is sort of, there's new surcharges that, Elena, you were talking about, right? That kick in. They kick in at much lower levels for trusts, 200,000 and 500,000 for those, 5% and the additional kicker there on the surcharge. So kind of watching and modeling that a little bit. Tad, I'm kind of watching and modeling around that net investment income tax change for those over the 400,000 as well. I think that can be pretty impactful to a lot. So I think that, certainly keeping an eye, like you said, Yelena, on everything that's going on, but just really helping to build awareness, that modeling. I know we've kind of said it before, but the one thing you can do right now, despite all the uncertainty, is model, right? So that way we're ready to pull some triggers when the time comes. But we want to know what you think as an audience member here. We put in the chat our Twitter handles. Feel free to reach out to us. Let us know how we're doing with this. If there's things you'd like us to cover or questions you have that come up during the week. I mean, certainly between last week and this week, a lot came up and directions totally changed. So please, let us know. That's really what we're here for. And I know we all enjoy doing that. Hopefully I'm not just speaking for myself here, Tad and Yelena, but I know from having previous conversations, you enjoy helping and answering these questions too. So I guess with that, anything else maybe, Tad or Yelena, before we kind of call the second Simply Tax Talks a wrap?
I would just say stay tuned. Who knows? In the last half hour, they may have done something. I haven't been checking, the feed, so or the emails. But just stay tuned and watch what happens.
Well, there you have it. Stay tuned, folks, and we'll be back in the feed here next week with all the updates as to what happens. And in the meantime, have a great week, and we'll see you all soon.